Well, full of sound and fury. Well, only way to describe these wild gyrations in the market this week. Think about this. Dow Jones Industrial Average up 200 points one day, down more than 200 points the next day. And then today it was up 85 points, and it was down 86 points. And then, of course, the Dow closes unchanged. But make no mistake about it. The Dow, while it finished slightly in the green, there was serious carnage in the S&P 500 and certainly in NASDAQ. And the topic of carnage, guys, we got to look at this retail sector because it continues to get walloped as Nordstrom's now joins that wallop parade. After the bell, 26 cents is what they posted. The street was looking for 45 cents. So stock's going to join Macy's and Kohl's in the disaster bin when it opens tomorrow. It might actually be at the lowest levels it's seen since 2011. So the question, what's the deal with the consumer? Is the consumer tapped out, or is the country just simply tapped out? Joining me now, Peter Morici and the co-author of Cocktail Investing, Lenore Elle Hawkins. Lenore, let me start with you. What's going on here? I mean, I know Amazon has taken off, and to a large degree, it's killing all of these retailers. But across the board, small retailers, large retailers are all getting slammed pretty good. Let me go, Peter. I don't know if Lenore can hear me. Peter, can you answer that for me?
Yeah, well, the real problem with retailers is twofold. One is there is online shopping, and their products are too expensive compared to online. Go into Macy's. A lot of the products are pretty trashy, or they're very expensive, like a polo, golf shirt. The other thing that's going on is that consumers, because they can buy cheap at H&M for fashion and things like that, are spending a lot more money in restaurants, on home furnishings, areas where department stores don't do well or have no presence at all. Consumers are still spending, but they're not spending at malls. They're spending online, and they're spending on non-traditional retail products. So there's been a shift in what consumers do, and they're just on the downside of the power curve. But it doesn't mean that the economy's tanking, and the stock market is reading the consequences of what's going on in retailing wrong, in my judgment.
All right, well, I know that millennials do live in a moment, and they do spend money differently. And to your point, after the bell today, Shake Shack had a good number and strong guidance. That stock is up. Yesterday, it was Jack in the Box. It was probably the biggest winner. But, Lenore, there's still got to be something in my mind. There's still some sort of a connection between the fact that savings has gone from 4.9% to 5.4% in just 4 or 5 months. Something is going on out there with the American consumer.
Well, how do we expect to have a strong consumer when 47% of Americans report that they don't have enough to cover a $400 emergency? How can we have a robust consumer spending with that? And we just saw the initial jobless claims jumped over the past 3 weeks, the most we've seen it jump in the past 11 years, and is now at a 15-month high. And we're seeing the announced layoffs rose 24% for the first 4 months of this year over the prior year. Now, that's got to have everybody very concerned, and you see consumer confidence levels across the board, regardless of income level, are all falling.
You know, Peter, interesting today, a lot of members of the Federal Reserve spoke, including Janet Yellen after the bell, talking about 2% growth, interest rates rather. The last report we had on consumer borrowing, consumer debt, surged. Credit card use, the fastest pace in 14 years. Is that a sign of the wealth effect that the Fed's been looking for, or is it a sign that people actually using the credit cards and make it day-to-day now?
No, it's not a sign that they're using it day-to-day. It's a sign that we're getting the spring recovery. We had a nasty winter, and you're seeing the consequences of that in these reported retail sales and, in the stocks of retailers and in profits generally. But savings going from 4.9 to 5.5, a brief jump in jobless claims. I can give you other data that shows you the job market's pumping along. It just depends on which data you want to pick. The reality is the consumers continue to spend. The GDP data shows it. The consumer spending is up and continues to go up, but they're doing it in different places.
All right, Peter, listen, I love your optimism. I'm not sure the audience shares it, or Lenore, author of Cocktail Investing.